In this video, traders, we're going to look at early signs a trade is not working out. Stay tuned. Hey guys, so question from viewer, subscriber. His name was Martin JG100. Thanks Martin for your comment. And he says, any chance you can do a video on how to look for early signs that a trade is not working out? Appreciate your question. And yes, I will do that right now because that's a super question. And that's basically, you know what, you can imagine Martin sitting there like all of us as traders. We sit there and we think, you know what, this trade doesn't look good. Now, do I cut it? Do I stick to the plan? How do I do it? How do I manage it? Let me share with you some ideas that work for me. I can always improve on them, and again, ideas and comments, questions as well from you guys. Comment section below. That's what it's all about. So, early signs of trade is not working. Now let's add a caveat into this before we push on with this video. We've got to be careful that we don't allow ourselves to shoot from the hip too much. So in other words, there's two sides of the fence here. One is, hey, your strategy is your strategy. You stick to it, and if you get stopped out, you get stopped out. The other side of the fence is, well, you know, I want to be able to cut it early if it looks like it's not working. And there's an argument for saying, well, just stick to your strategy and stop meddling with the thing. And the other argument is, well, okay, I will stick to my strategy, but I want to add a layer in that allows me to have some kind of input onto closing the trade early. So I am an advocate of this side, but with a caveat of it has to be in your plan. What I don't like, and again, it's coming back from a discipline issue, made these mistakes before, is allowing yourself too much flexibility and then just cutting and adding to trades almost willy-nilly with no structure because you just feel like it, because then you can't quantify your results. So we've got to be a bit careful with that when we do this. So the idea is we're going to plan this into our trade. Now, okay, I'd love to be able to stand here and say, you look for these 5 things, and these 5 things will guarantee that a trade is not working. I think everyone knows that, we know that's not the case, but some clues that we can look for. And the way I like to reverse engineer it is I like to say to myself, okay, well, what conditions am I trading on? What is my thesis for the trade? So in other words, really, we've got 2 categories, right? We've got a kind of range expansion or a trend type trade where maybe we're buying a pullback, or we've got a mean reversion type trade where we're looking to fade a move to the downside, or it could be to the upside. We're looking to fade a move. So for me, those are 2 distinct things that I want to see, and they're almost polar opposite in ways. You know, if we're trading a little spike to the upside here through a resistance level and fading that, I would want to see the subsequent candles reinforcing that rather than the subsequent candles not reinforcing that. So if we kind of zoomed in a little bit onto this one as an example, and actually it's interesting because I did something like this. We talked about this on our last traders meeting that we've got going on in Manchester. Let me just rub that off if I can. I haven't got my cloth with me, but you bear with me. Right, okay, so we've got this scenario. Let's say that's that. Now, that's all very well and good. We might be all the way short with that. And we'd be fine if that pushed lower. We'll be very, very happy. But what happens now if we get another bar that does this and it starts to kind of sit up here? Now, that might not be the worst thing in the world, but for me, the thesis of that trade is that that level's been rejected. There's no more demand coming in above that high. Sellers are perceiving it as value, buyers are not, hence why we've pushed lower. The subsequent candle is the candle that is really the sweet spot for me, and won't go into detail about that now, but that's really the right one for me. But then if afterwards I find that the hypothesis of the trade is almost negated and it looks like, okay, they're accepting that level, that's not really rejection, buyers are still interested, I might then add into my strategy, well, if I see this, trim the position, especially if I'm in a significant size. Perhaps I've gone in a decent size clip on this, and I might say, well, if my size is in the upper tier of my allowed, then if I see this, then trim it because I don't want that added risk. I might say if I'm in a kind of regular size or small size, then don't trim it because I'm allowing for this with my risk management, etc. So that might be something I'm doing. The point is, going back to the initial thing, and let's not overcomplicate it, is I don't want to see something that is outside of the remit of what I would want to see, if that makes any sense at all. In other words, I don't want to see it accepting that price again. Sure, the thing could roll over, but for me, that's a warning sign. And so for me, I might say, all right, under certain circumstances, that could be an early sign the trade is not working. Now, it'd be even better if I went back and I had a look at all my strategies and all my charts and said, okay, well, there's a few that if I'd cut them out when they started doing this, that kind of 4 out of 6 of them would have stopped me out and I'd save myself a lot of money. The one thing to point out, guys, before we look at something else is that, let's say my stop was above here, it's irrelevant to look at this trade is not working in terms of price. You know, it's all about the price action. It's all about what has happened. It's all about that little look under the bonnet we talk about. That could well be shifted down a lot more. You could be in quite a nice profit. But if the price isn't really doing what we expected it to do, or it could be even lost. Maybe we came in a bit late to it. We took it on half this candle and we're now sitting here and our stop's there. It doesn't matter. That's irrelevant where the price we got in and how the trade's doing at the moment. What's the most relevant is how the price has done it. So early signs the trade is not working is something that would indicate that, hey, this doesn't really match up with what I want to see. Now, are we always going to see it doing exactly what we want? No, we're not. So that's why we have to have some flexibility. We can't just dump every trade that doesn't go our direction straight away. But there will be warning signs, and there will be enough warning signs that will trigger us that say, okay, enough's enough. You know, like if we're buying, let's imagine we're buying, that was flipped on its head and we bought an exhaustion candle and it come to lows and we bought this, and then it started to revisit again. We want to see that. If we bought this pullback as it broke through there and it started then to just sort of trickle down lower, not quite to our stop, then we need to have something in place potentially that says, you know what, our thesis of the trade was, the reason we pulled the trigger on this trade was that we believed that we were about to see a good push up. That was the whole point of it. So now we're not seeing that. Is the trade still valid enough for us to hold it? And that's the kind of thing we have to ask ourselves. That's the thing we have to put into our strategy. So we'd be looking for stuff like in the volume on the breakout, how it responds when it breaks through that trend line, you know, how far it goes, how much time we've got till the close, all that kind of foundation stuff that we do anyway to decide whether the trade is worth taking. That will add to that to say decide the trade is not working. Just a reminder, we've got to be careful we're not doing this on every single trade and just when it doesn't do immediately what we want, we cut it, because very often some of the uncomfortable trades like these flushes that we take will sit there a little bit and before they go. So it's not a kind of black and white rule, this, guys. It's a case of, what's the worst thing we don't want to see? And there might not be any scenario where you can tell before it stops you out. And that might be one of them. It comes down a flush, you've bought it on the flush, your stop might be under that flush low, and it's like, well, it's still valid. It might just still be messing around a little bit before it rips off, and if it stops, that's fine, otherwise I don't want to cut it. Maybe you might have a time stop on something like that, but you probably don't have anything else, unless, okay, another one that you could possibly have is if it ripped up, then immediately rejected and started kind of doing some work down at the bottom and kind of being comfortable down there. That might be a warning sign that the bulls had a chance to get it, couldn't really rip it up, they had a little bit of demand coming in, sellers smacked it straight away. Maybe it's not ready and not ripe enough yet for me to start getting aggressive on it. I'll trim and I'll reassess and adjust it like that. So I hope that's helped in some way. If you've got any ideas, guys, then please stick them in the comment section below so I can kind of see what your thought process is, and maybe we can wrap it all up and all become better traders as a result of it. So there's early signs that a trade is not working. If you like this kind of stuff, a thumbs up appreciated. Take care. Bye bye.